Hey, this is Mike Durr, Kingwood Mortgage Guy, and I'm here with Joe Salas of Purple Paint Inspections, Jane Byrd Properties, and multiple other uh, cool things that he does. Joe, how you doing today?
I'm doing well, sir. How are you, Mike?
Well, good. I'm doing better than I deserve. That is absolutely the sure
I
thing.
feel that way too.
So, I was looking at data today to share with the people that are following our content, and there is so much news out there. I thought it would be a good day to just kind of keep up or to catch up on the news. And some of it's real estate, some of it's mortgage rates, some of it's just probably some questions that people have. I thought that'd be a reasonable way to start. What do you think?
That sounds good.
So, one thing, let me add this to the stream. Let's see what this does to us. Okay. So this is what mine looks like. And of course, we always want to say that with better credit comes a better home. We believe that. And that's what we kind of talk about. But here's kind of like a heads up on what we're going to cover today is first thing, since I'm a credit guy, I'm always going to talk about raising your credit score and how to do that and what the questions are about that. There was a big article out today and earlier last week about mortgage layoffs, housing supply improving. This is something that Joe can help us on this. I mean, it was interesting article to read that. And then the other constant question that people are thinking about is there going to be a housing bubble? And we'll chime in on that. National rates for 30-year mortgages. Actually, there's some cool stuff going on. The 20-year mortgage rates are attractive, and I got a little slide to show you something that might be interesting for you on that. And then the last thing I was going to talk about was the lock and shop. Lock and shop is a way to beat the rising rates. Now I'm going to put this one up here. Joe's got some stuff. Go, Joe. Talk to me about what you got.
Yeah, well, I wanted to take us back to the basics of what I do as an inspector for people that are out there, clients that are out there looking to buy their first home or their 15th home. It's always prudent to hire an inspector to give you the information as far as the general condition of the house at the time of purchase. That's what we do as inspectors. We inspect for deficiencies. Inspect for performance of systems, and we report to our client what that those deficiencies are. So we call that the general condition of the house at the time of purchase. Now, I mentioned systems, and this is where I wanted to review today because we've talked about this in a higher level in the past. But I wanted to inform our viewers out there what exactly is the content or of the inspection report. So the section report is actually separated into different sections, let's call that, right? One section is the structural systems section. The next section is the electrical systems. Then you have the heating, ventilation, air conditioning, plumbing, appliances section, and then optional systems. The systems or the sections from structural all the way through appliances, those are required by our standard operating procedures on each and every inspection that we do. The optional systems, of course, if the inspector is qualified and competent enough to offer those services, they are also allowed to inspect those systems. So the next slide, I wanted to show our viewers what is involved in or what are the components and parts of each one of those systems. So in the
But
structural system,
But
yeah,
before you go there, I want to remind everybody that the inspection is not just for buyers. It's equally important for sellers. And I'm a very recent testimonial person that can tell you that getting that inspection done before you decide to sell will save you money also.
yeah, yeah, absolutely. And I do mention that to my clients. Obviously, we've talked about it. I'm both an inspector and a real estate agent. That's one of the things that I say to my listing clients, the people that want to sell their homes, is that's of value. Knowing the condition of your home prior to selling will give you a couple legs up. One, it's going to give you the knowledge of what you can fix and what you want to sell as is, but it also allows the buyers out there to know the condition of the house prior to placing that offer. It gives the seller a leg up on, let's just call it negotiations of concessions. after an inspection, even if the buyer chooses to have an inspection. But what are the parts of the inspection? So I mentioned those systems. We have the structural system that can include everything that you see listed here, including the foundations, walls, ceilings, floors, doors, windows, inside and outside the home. A little known fact is that if it is safe for an inspector to get on and off of the first floor roof, that's actually a requirement of our inspections. The state requires us to get on the roof. That's if it's safe for us to get on and off. And there are some conditions that may cause it to be unsafe. The slope or the grade of the roof is one of those things, and condition of the roof also is another one of those things. Electrical systems, we're looking at the service entrance and panels and the branch circuits, the connected devices and fixtures. I tell my clients I'm even going through to the panel, the service panel, and removing the cover to the service panel, looking at the wiring behind and the conductors behind that cover to make sure everything is appropriate, also to alert you to what type of wiring is in the house. Is it aluminum wiring? Is it copper wiring? Each one has its benefits and also some negatives associated with that. So it's a general information report. And HVAC system, same deal. Plumbing system, same deal. It is our job as inspectors to do a couple of things. One, we follow the standard operating procedures as provided by the state of Texas. Those are available to any consumer out there. All you would have to do is log into the TREC website and view those that standard operating procedures and processes, so that you are informed as to what is inspected and what isn't inspected, and what we would call a deficiency, and what is considered operating within range. As far as the optional systems, though, it's dependent upon the inspector to inform their clients whether or not they're competent and capable of inspecting certain systems that are in those optional systems. Landscape irrigation, or what we call sprinkler systems, those are common in most houses. The way I inspect those, and I alert my client that I'm not a licensed plumber or licensed inspector of sprinkler systems, but I can surely go to the control box and turn on all the zones and let them know if I observe any leaks or operation of equipment that isn't within the bounds of what I'm looking for. Swimming pools and spas, I am not qualified, and I do not inspect swimming pools and spas. I will either refer you out to a competent inspector in the area, or I will hire one and charge you through the inspection fees that I am charging you. So make sure that, me personally, that's fine for me to tell my clients that I don't feel comfortable or competent enough to inspect swimming pools, but make sure that you ask those questions, and if they do say they are competent and qualified, if you don't choose me as your inspector, ask for example reports, ask for common deficiencies that they find in these systems, so that way you feel comfortable of the competency and whether or not the inspector is going to take care of you. An inspection is a very important part of the real estate process of buying a home, and as you mentioned, Mike, listing a home as well.
Absolutely.
And that's all I got. I just wanted to remind everybody what the sections and the parts and components to the inspection report are. If you have any questions, you're more than welcome to give me a call. We'll go over the contact information later on in the presentation. But I'm interested in hearing what you have to say about the recent news, Mike. What you got?
Well, let's take a look at it. So here we go. The first thing is, this isn't old or new news. This is just regular news, is that bad credit will negatively affect the ability to buy a house and or buy the kind of house that you want. And that goes, because our whole thing is better credit, better home, we're going to talk about credit pretty much all the time. And I talked to a guy today, just a brief conversation I had with a guy that's trying to improve his credit. I help a lot of people improve their credit at no cost. And I do it because I want to help them buy a house. There's also a lot of credit restoration people out there that are not honorable, and they'll charge you $600, $1,300, whatever the cost is, and they don't do anything. So I always encourage you to check with me. And I found that about 1 out of 20, I actually refer to somebody that does credit restoration. So it's always a good idea to call me. It's free, it's cheap, and I'll give you, if you're pointed in the right direction to get your credit improved. This guy, I told him there's a thing called an authorized user. Have you ever heard of an authorized user?
Yes.
Okay, so the reason you use an authorized user account is you've got a family member, sometimes it's a wife, sometimes it's a sister or brother, and sometimes it's a parent, is you can actually piggyback on somebody's good credit and their good paying characteristics to be your own. And this is particularly helpful when you have a very thin credit profile. And on this particular case, though, the guy was an authorized user for somebody that had a couple lates on it, and it had a high balance compared to the limit. And I told him, I said, dude, there's no reason you're an authorized user on this account. You've got to get that thing removed. And he listened to me. He heard me. He chose not to take my advice. But he did call me and he says, hey, I think my credit score is up. And one of his scores was up. The other two scores were about the same. And the way we work is we use the middle score. Since two of the scores hadn't changed, his credit didn't really change. That one bureau changed. And that was because he was using an Experian app. The Experian score improved. So I just, all I can say from that example is there's no reason in the world I'd give you bad advice. And if you want my advice, at least apply it. I mean, I think it'll help you. So that's the better credit part of it. Let's see what else I got here. So this is kind of interesting news. There were a bunch of layoffs today, and not just inconsequential layoffs, where Wells Fargo CFO Mike Santomassimo blamed here's the reason for the layoffs. Decrease in refinance activity, along with higher interest rates for what he called the steepest quarterly decline in the mortgage arena since 2003. So that's kind of what we're going through right now. The average interest rates accompanying 30-year fixed mortgages have risen above 5% in recent weeks, a figure not seen since 2010, according to Business Insider. And I think I leave my notes over here. What did I do here? Anyway, the list of people that had laid stuff off, Wells Fargo has over 2,000 people that they're laying off. Chase is laying off over 2,000. Quicken Mortgage and Rocket Mortgage are both laying off a bunch of people. And the reason for that is that they had hired a bunch of people, not only processors, not only originators, but underwriters, all to take care of the immense number of people that were able to take advantage of refinancing. And the whole thing is that the fact that they're laying off a bunch of these people is going to be kind of interesting, and there's going to be a little less people to shop with, and a little, just because there are less people out there doing refis. Now, we're still doing refis. There are still reasons to do refis, but the number of people that you have out there that are calling and harassing you to do that kind of stuff is going to be less. There's also a whole lot of people that got into the business a little bit late because it was so lucrative. And guess what? They're having second thoughts about how wonderful the mortgage business is to make money in, because there's just not as many clients out there. So I thought that was kind of interesting as far as news in this case that relates to what's going on. The other part of that is that the housing supply is kind of in the news today. And I brought this map up to show you. These were, if you look, well, you may not be able to see this, but in the blue down here, these are the areas where the housing demand was low. The yellow represents stable. And then in red, these are the states that are hot. Now, there are a lot of states out there that are still red hot as far as housing supply and homebuyer traffic. But what's starting to happen, and we don't know if this is a blip or what, but I don't want to do that one yet. But the whole premise is that the news came out that there is starting to be an easing of inventory. So there's going to be a little more inventory out there based on one of the reports that we saw.
I mean, who wants to live in North Dakota, Mike?
Well, there you go. I mean,
I heard an article today. Actually, was on the radio when I was driving my son to school this morning. They rated Houston area as the number one city area in the United States where people are moving into. So people are
Mm-hmm.
still migrating into the Houston area, which makes this market a little bit more resilient to some of those blips. But I am seeing a little bit more inventory pop up. I think it's a matter of the season, right? You see a lot of that happening at the end of the school year when people are ready to sell during the summer and move to wherever they need to go and get the kids back in school, if that's the case. But usually during the winter, you see a slowdown, and during the spring and early summer months, you start seeing it pick up. But as far as our market here, it is still, like this map shows, still high traffic and hot, hot, hot.
I'm wondering, did they mention why Houston was perceived to be one of the hottest towns around? Because in my opinion, Dallas is much hotter, and the I guess the number of people that are looking for houses in Dallas and Austin and maybe even San Antonio would be ahead of us, wouldn't you think?
They didn't mention why, but I can only guess it has something to do with the highways around the Dallas Fort Worth area. I
Uh-huh.
can't stand driving those highways. It's
Yeah.
crazy. I get lost. The E means north, and next thing you know, you're uh, over in Corsicana. So
Well, I do believe, as far as the size of our city and the number of job opportunities here, it's got to be related to the workforce that we have the capacity to handle, and our pricing is, that may be one of it, is because I think that our market is a little easier to
yeah,
buy
I
than it is in Dallas and Austin. So
I
that
believe.
could be
Oh,
it.
definitely compared to Austin, for sure, for sure.
So I thought that that could be some encouragement to some people that are still thinking about buying. So the other part, though, is this one right here: is there a housing bubble? And what's your opinion about that?
Um, you know, I'm on the fence, Mike. I do a lot of reading and I do a lot of ingesting of that knowledge. It seems, when everybody talks about the housing bubble, we automatically go back to 2008, 2009, and think about what was happening there. I don't think the current climate and environment is the same to be comparable to 2008, 2009. I think we're dealing with a different beast in that regards, but um, as inflation kicks in and as these houses are appreciating over 13, 15% a year, I mean, you can only think that something is going to have to give, right? There's an old saying, what goes up must come down. Um, I believe I read another article that said this time period between 2008 and 2009, which was, we can call the last bubble crash of the real estate market, to today is one of the longest time periods in between the ebb and flow, the up and down of the normal cycles of real estate. So we are stretching the limit as far as the time in between those things that historically have been proven to happen on an average time period. So is it coming soon? Who knows? Is it coming at all? That's one of those things that I'll leave to the people that are smarter and make more money than me.
Well, I'm going to take the opposite view on that, because I am convinced that there's not going to be a bubble, and if there's anything, there might be a little less uh, air going into the balloon than what there has been, because it's been blowing up fast.
Yeah,
But because of this, because of the shortage of homes in this many states, I mean, who would have thought that homes, particularly up in these northern areas here, is still very, I mean, they're having the same kind of waiting list and people standing in line to buy houses. And somebody explained this to me, that one of a guy named Barry Habib, who's well known as one of the top forecasters for what's going on in not only the interest rate but the housing market. And his comment was that we should blame it on the millennials. Now, if you're a millennial, I'm not blaming you for anything, but here's what he has looked at, and he's basically said that the millennials waited till longer to be in that first time home buyer group.
that's true.
It's 25 to 30 years old, maybe. And he said most of the millennials are in their 30s and they're just now buying their first home. They stayed home with mom, or whatever they did. But what they've done is they've put pressure on the housing market. And then, of course, we had the other part where we had a shortage during that COVID period, where whatever the supply lines, the price of wood, the hard to get things, just really stunted the building industry. And so the combination of those two have really put us in a position where we are in a position where we're gonna have a shortage of houses for a long time. They're not building enough houses to catch up anytime soon.
You know what statistic would be interesting, Mike? And I was thinking about this earlier. What portion or percentage of homes being bought are bought by institutional buyers? Because
Well,
lately I've been seeing a lot of institutional buyers approaching me via email and giving me calls that say if I have a house that is off market that I know needs some work, to let them know. So that's something that I'd be interested in.
well, I don't disagree with you because you know that the housing is one of the things that is a tool to fight against inflation. I mean, the price of a home generally goes up as inflation goes up, and so that is a very good hedge against inflation. And that's a message for anybody out there that's thinking about buying. And I think it's a valid one. Is one of the few, and there's not a lot of tools to fight inflation, but the home is one of them. And a lot of times it will at least hang with inflation, so that as the price of goods goes up, the price of your home is going to go up too. The other thing that's pretty much a slam dunk is the interest rates have shown some indications that they're slowing. And there's, again, Barry Habib, who I'm going to use again as my support for this, is indicated that there's almost a 95% chance that there's going to be a recession in the United States. When that recession happens, one of the things that happens is that interest rates go down, which is going to create a little bit of a chance to buy a house with a little lower interest rate. But better than that, it'll allow people that have bought at the 5s and 5.5s and those kind of rates to refinance it and get back into an area where you're actually on the better side of that. So I think those are big news items. And I'm not going to tell you that I know everything. And I do listen, like Joe. We're kind of students of this game, and we have our own opinions of what we see. And the number of buyers just is too strong for this to be a bubble anytime in the near future, from my standpoint. You know, as soon as I say something like that, I'll probably get smacked. It'll probably happen next week. But
You know what's funny is after we met last week on Tuesday, that's when the Fed raised the interest rates. What was it, a half a point?
Yeah.
And I had a gentleman call me. He's an investor client of mine. And he's like, "Hey, did you see that announcement?" And I said, "Yeah, but where's the market going? It was going opposite, right?" And then the next day, I'm glad I didn't buy into the market then. The next day, it crashed another 1,000 points. So, you know, you never know. It's like washing a car, right?
Yeah. It's going to get dirty real quick. All right. So this is about mortgage rates. And what I wanted to do is I just wanted to show this graph. These are from the leading housing authorities, and it's really just what's going on with interest rates. And Fannie Mae, Kiplinger, Average, MBA, Freddie Mac, Realty Track are all tracking rates. And as you go towards the right, which is more like today, this actually report came out in April the 15th or 19th, something to that effect. And rates are right there. I mean, 5.25. If you get a 5.25 rate today, that's a really good rate. Most of the rates are a little higher than that on 30-year financing. Now, I did a little bit of analysis this morning just to kind of bring some reality to this. I looked at a 30-year refinance was going to be somewhere between 5 3/8 and 5.65. That's just what's going on today. One of the things that we learned, though, we talked about this last week about ways to lower the interest rate. Well, one of the things that I didn't even think about last week, but I studied on it, and getting a 20-year term right now is going to save you. It's got a better savings today than it used to have. When you went from a 30 to a 20-year term, you would save about 1/8 of a point. Today, you'll save 1/4% on the interest rate. And you go, well, that doesn't make much difference. Well, it kind of does. And I'll show you this. I'm hoping that you'll be able to see this.
Yeah, we can see it.
What I'm showing here is a 20-year mortgage amortization versus a 30. And the key points on this are, one, the payment's going to be higher on the 20-year. Obviously, you just got shorter time to pay it. But what I highlighted is on a 30-year mortgage, that first 10 years of a 30-year mortgage, the amount of principal that you pay is so modest, it hardly makes a difference. And if you can look on there, I think that the number is 325.72. Is that right? I can't really see that because I probably could blow this up.
On the principal on the 30, it says 320.72.
Yeah, 320.72. And of course, the principal on the 20-year is double that. Is it, what's that number? 690 something?
698.79.
So you're just paying so much more principal. It's like you whacked off that first 10 years. Now you're paying all that principal much faster. And then this is kind of the interesting one. This is the interest paid. Okay, this is the interest paid on a 30-year mortgage if you have paid it to the end from start to finish. And I think it's 320,000 something.
Yeah, it says 321,708.
Okay, and on the 20-year, look at the number here, 190.
190,209.
That $110,000 in interest is money that you get to keep. You don't
yeah.
have to pay that. And so the 20-year could be a very attractive piece. Just it's going to cost you a little bit more. I figured this on a $300,000 loan, and the difference in the two payments is about $300. And then that may be too much for somebody to handle, but if you could handle that, the payoff is big. You get a lower interest rate, and you're paying. I mean, you're saving $110,000 or $20,000.
Yeah, 131
Yeah.
per your math here.
Yeah.
Question, Mike, does this include, when you worked up this example, did you have any money down, or was this financing the full 300?
Financing the full 300.
The full 300. But as a note to anybody that's viewing this, and correct me if I'm wrong, this does not include escrow for
Correct. Yeah.
For insurance and taxes, right?
That's right. This is surely just the note and the principal and interest. Yeah, those are good comments there. Anyway, but I thought it was worthwhile to see that. The 20-year, obviously 15 years better than this, but 20-year, it seems like that payment for that next 5 years is actually another couple $100, and that's going to put it out of the range of somebody, or many people. But the 20-year is a product that I think is come around. Now, I don't remember if I mentioned this. I think I did. There's still adjustable rates that people are starting to go to, because the fact is that people don't live in houses for 30 years, except this kid. I've lived in my house 30 years.
16 here. I'm busting the norm.
Yeah, but most people, particularly that first house, 5 to 7 years, 5 to 10 years, something to that effect. And a 10-year fixed rate right now is at a discount. It's a discount from what you could get at a 30. And so with the potential for rates to go back down, that could be a good play.
Mike, if I may have a request from you, maybe even next time we get back together, to dive a little bit deeper or explain a little bit more about the ARM mortgage, the ARMs, because I want to learn. I'm being a little selfish here. I want to learn a little bit more than what I know, and I think it might be something that could be a viable option for people out there that are looking for purchasing a home.
Yeah, okay. I'll make sure I do that. Also, just an FYI, this particular form is simply an Excel spreadsheet, and I send this to people for free. It gives you, if you have a mortgage and you're watching this, I'll send this to you, and you can just plug in your data. It's kind of interesting how it works. Is you can plug in, I'm going to make right here, this little box right here, it says, I want to make $200 a month extra payment on my mortgage each time. And what it'll do is it'll recalculate it and show you how many years you can turn off by doing something like that. The other option is, if you're not going to be that steady, you could actually put that amount that you pay off in this column. So if anybody wanted me to send them that, just say amortization table and send it to Mike Durr, Kingwood Mortgage Guy, or Mike at mortgageguys.pro. I would definitely send that right back to you with a little video showing you how it works. Okay. And finally, I like to, this is something that's going on, that with interest rates going up, one of the companies that we work with has got a program that is a lock and shop. And what that does, it allows you to lock today's interest rate in for a 90-day lock, and you don't have to have a house. And what happens is, if you go through and let's say 60 days later, you find a house, you'd still be operating on May the 10th interest rates. And what happens is, if rates continue to go up, that could be a substantial savings. And keep in mind, in the last 90 days, rates have doubled from about 3% to 5.5%. So call me if you have questions about the lock and shop. This is for people that are getting ready to start looking. They expect to close the deal. It's not that easy to close a deal these days. Not so much the loan part. It's just getting somebody to accept your offer on houses. Is that correct, Joe?
That's right.
So a lock and shop is a great program. I wish this program was going on back in January. I wish I was smart enough to adhere to it and preach about it. Then we'd have people buying and really winning on the interest rate thing. But who knows where it could go?
Yeah. Well, I have a question for you, Mike. I heard, let's just call it a rumor today, that interest rates were forecasted to go up to about 8% by the end of the year. What do you think about that?
Well, I haven't heard rumors like that, but the speed with which they went up for the first 3 months of this year concerned me. And I've been in an 8 and 9% interest rate environment. The information I've gotten recently and the stuff that I've seen daily in the last week gives me some comfort that there's going to be a little bit of resistance, and we may get up into the 6%. I'm not thinking that it's going to go much higher. I think in the sixes might be as high as it goes, and I hope it doesn't go there. To be honest with
I know,
you,
me too.
I mean, the interest rate. The reason that they're having these layoffs is a big part of it is because people aren't. I mean, they're spoiled a little bit by the 3%, 2.5%, 3.5% interest rates, and they don't want to bite that 5+% thing right now. They just don't think it's a good time to buy. The other thing is houses are expensive. But my
Well,
point is,
also, if they were qualified to buy, let's say, a $250,000, $300,000 house when interest rates were lower, and all of a sudden interest rates go up, no, they no longer qualify for
they're no longer
$250,000,
qualified. That's right.
$300,000
They've
house.
been priced out of the market
Exactly.
with the appreciation of the houses and the increase in interest rates. There's a lot of people like that are suffering through that. But if you can still buy, I still think you should buy. I don't think that there's going to be any kind of bubble, at least in the near future. And I think it's better to have a home than not have a home at
I
this
agree.
point in time.
I agree.
So, anyway, I've rambled a lot. That's about 30 minutes. Joe, what do you want to finish it off with?
I love it, man. I'm so glad to be a part of this knowledge share that we have weekly, and I look forward to our discussions in the future. As always, if you need anything from me, give me a call. My number is 346-224-4224. My name is Joe Salas, Purple Paint Inspections, license number 22197, and also a real estate sales agent with Byrd Properties International. Hey, one thing before I let you do your spiel, Mike. I want to say congratulations to my wife. She just recently obtained her real estate license. So
Awesome.
she is a licensed sales agent working with Byrd Properties as well. So I want to say congratulations, Allison. You did a great job.
Excellent. Excellent. Well, congratulations to her on my side too. Well, yeah, this is Mike Durr. Listen, I wanted to let you know I'm going to be sending this to my database. And again, the way I describe this is what we wanted to do is we kind of want it to be a news show, an information show. And it may be not the information that you need right now, but you may know somebody that needs this kind of information. And we think it's pretty valid. We try to be as transparent and honest as we possibly can. And the bottom line is these are our opinions. We can't be held by these, but they're definitely what we believe is going on today. So, Joe, I look forward to seeing you next week, brother.
All right, my man. I'll see you then.
All right. Okay.
Thanks,
Bye-bye.
Mike. Bye.